As part of the expectations in the run-up to the Union Budget 2016, today we have Prashant Deshpande, an expert on indirect taxes, who will share his insights on the budget relevant to indirect taxes.
Every budget is an opportunity to set out and directionally correct the economic reforms agenda. While the goods and services tax remains at the top of the government's agenda, the delay in implementing the goods and services tax gives it an opportunity to correct the flaws in indirect tax and also make certain changes that would gel with GST. For instance, a merger of several taxes into a goods and services tax law could be preceded with merger of excise and service tax into a single legislation, and that would facilitate an easier transformation into a CGST law. A reduction of CST, that is Central Sales Tax, to 1% would be also in line with the GST Amendment Bill proposal, which envisages an additional tax at 1%. The non-recoverable levy of Swachh Bharat cess creates a cascading effect. A recent survey conducted by Deloitte favored subsuming of the Swachh Bharat cess into a higher service tax rate. It's not too late to progress with the reform suggested by the Tax Reforms Administration Commission headed by Dr. Shom. While a common tax research unit has recently been set up, a pick and choose method of implementing its recommendations may not work. The finance minister should set out a roadmap of implementation of the TRC's recommendations. Lastly, there is an expectation that the indirect tax rates may head northward. However, the FM should take care to see that the increase in indirect tax rates do not lead to inflationary tendencies or further dampen the manufacturing sectors. All in all, he has to do a balancing act that will continue the positive economic outlook and at the same time meet his revenue concerns.